All right, ladies and gentlemen, I hope you had a wonderful day. The stock market went absolutely insane today, and it was because the CPI, but the story wasn't about inflation. It was all about rates, and to make it simple, this is how a lot of people felt after the end of today. The next Fed action is more likely to be a cut next summer than a rate increase. That's why you probably saw Kathy Woods today, Yes, Chattadonia, everybody got an unexpectedly low inflation number, and the rate hike odds for next year finally started to move, but this time it was bullish. So if you've been seeing the financial conditions, you've been talking about Powell, and you thought last couple of weeks' rally was insane, it just got crazier, and now you are 100 points off of the recent high that we have set this year. So, Chad, we got a ton to talk about. There is data in the morning, even some data tonight, so we'll see if it could slow this rally down. There has been a couple of times where rallies like this have came to a grinding halt, but the way it's looking now from bear market rally and everything, and if you go look at where the bonds are, we are going to have to talk about this. This is leaving people feeling very good towards the end of the year, and believe me, you're going to start hearing about Santa Claus way earlier than you expect, especially on Wall Street. So, Chad, I got the recap. I got the plays. We're going to go over all of that. You're going to want to stay tuned in tomorrow, so don't forget, baby, we are live Monday through Friday, 30 minutes before open, youtube.com/thisstockmarket. This is live. This is CUC today. Even there, we were there in the morning. I won't be there early tomorrow for the data, but I didn't even tell you to like the video, man. I'm just saying. It's wild intraday, but Chad, run it.
Working to the couch, it's the 2020 last. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, obviously today was a good day. The reason was the inflation numbers all came lower than expected. The weird part about all of it is that everybody expected these numbers to come down. We talked yesterday about some of the worries that people had, but the thing about it is why it was unexpected, because what this data shows today was that it was even lower than the drop that was forecasted, even for core. This is like the lowest reading, I think, since 2021 now, back at 4%. So the market loved it. It was absolutely insane. The NASDAQ was about 2.3%. It's not showing it up here after hours for some reason, but the Russell closed up 5.5%. Regional banks were up 7. You can see the S&P and Dow here, but it was absolutely wild, and it was simply because this lack of inflation, it is further cementing how the market was kind of bullying Powell last week in believing that he is done raising rates. Like I said here at the beginning of the video, a simple way that people are breaking it down is they're saying, listen, you're closer to rate cuts than rate hike or anything else. And now, obviously, Powell's job and what you heard even in the midst of this rally was he's going to say, no, I'll raise rates. But if this data keeps coming in, like we said, if that inflation number comes in lower, just like you're seeing right now, after today, with the rates where they're at and Powell not moving anything, you just got a little bit more restrictive by inflation coming down. So this is what has everybody freaking out. And like I said at the beginning of the video, the real main story had to do with the Fed futures. So it's been countless times we've brought this up, and it's been a while since they've actually made some meaningful moves. But specifically what happened today is that you finally saw your first incy wince of rate cuts priced into May. Previously, the only sign of rate cuts you were getting for next year, it was July. That was part of that tightening of financial conditions and even what you've seen with bonds as of late. So the Fed futures today, after getting this data, a lot of the market was saying, oh yeah, now this means the Fed is definitely done raising. So we talked about it yesterday. I thought you would have got a little surprise. I thought core would have ended up going a little higher. It went lower. headline even went lower. It was only by 0.1, so it could have been a lot better. It's not like you saw inflation even on the headline show a two-handle, but people really were liking that 4%. The real estate number was still higher, but it did come down after that little blip that it had last time. The health insurance did not have too big of an impact. I believe it was 1.2%, and remember, people were forecasting around 0.8 on average, so a little higher, but even in general, all of the inflation came down. So now, is this a big deal? Yes and no. I think it's going to clear out a lot of the way moving forward towards the end of the year. We do have data tomorrow that I'm going to go over, but like I have been telling you, you still have a jobs report and then the next CPI and jobs report after that. So those are going to be the real inflection points. Other than that, though, it's clear the market is brushing off any of the negativity as long as the bond yields, and that was the other final thing, as long as these stay in a not so crazy restrictive stance, the market could go up, and it doesn't mean that the bonds have to ease, kind of hold up. But like we talked about yesterday, remember that 4.4 number? Well, after the good data today, we magically went right down a little bit above it. So 4.40 flat would be even better. But like we've been talking about over the last couple of weeks, if you just hold 4.5 to 4.25, I do think this is where a lot of crazy things can happen, and then the market kind of settles in, and then we await until what we get into next year. So that's the main thing with all of today. Again, don't stress on it too much. It's going to create a lot of wind and opportunity with what we've seen as of late, but there is going to be a couple of follow-up events. So that leads into tonight. You're going to get GDP numbers out of Japan, but mainly China. That meeting, they're getting that started there tomorrow, tonight here with Xi Jinping and Biden. That's going to be important, but then there's also a bunch of China data. Not only are we getting our retail sales in the morning, but so is China. So we want to hear about that, even their unemployment rate, and we want to see if that could spark anything, because even though things have been rallying after selling off, China has not really been participating, at least stocks, China stocks on the U.S. markets. But that's going to be tonight, and then for tomorrow morning, you will be getting data bright and early, same schedule as today, 1 hour before the bell. The PPI comes out and the retail sales come out. So I said this a lot today. PPI has the ability, and this year has moved the bonds more than anything. Now, with CPI coming in lower, a lot of people are assuming another price inflation gauge would also come down. It's not a guarantee. I don't know about the correlation and how that always transfers over, but in general, PPI has the ability to move the bonds. That could affect how people are viewing interest rates and moving forward. So it does have the ability to slow things down. However, is the PPI and inflation the main story for the Fed right now? Not really. We've already been watching a lot of these charts come down. The next part is the consumer. So the way people are breaking it down for tomorrow, and I agree with this wholeheartedly, the most important thing for the Fed tomorrow will be retail sales. We've seen everything from credit card data going up, down, and people saying the consumer is strong, weird spending surveys, and then results. Even these companies on earnings, they haven't been too bad. And then not to mention, throw in the payments for the student loans and everything else going on. People are wanting to see if this is going to hold up and how the consumer is feeling. Even that earnings that we have this week, you had Home Depot today, they were a little bit better. They were able to go up with everything else, but the consumer is very important. So this is probably going to be your biggest driver tomorrow, in my opinion, and the biggest thing that could now, if it affects the Fed, it's going to affect the Fed future. So I'd watch out for that. Otherwise, I said it today, if those come in negative for the market, PPI ends up coming in hot, and then we see that the retail sales is also coming in a lot hotter, which would mean inflation. And what Powell is going to have to do with inflation, that would not be a good thing. You want a weaker retail sales, believe it or not. I do believe that is what the market will take as positive tomorrow. If we don't get that, I think it could add a speed bump and maybe keep you in this range, because at other times we've been here, again, go back to September, even at the beginning of this rally in early July, you have kind of sold off right where we topped out today a few times. There's even one big close. Where was it? I think it was like right around here, in between, somewhere in there. Oh, right there. That was one of your tippy tops, but it's right where we are right now. So I would keep this in mind, because I think tomorrow the data has the ability to slow us down, but I don't think it's going to send you down 200-300 points now, and now we got to follow the bigger sets of data. But other than that, we go to the debt ceiling. There was news. Again, the debt ceiling was supposed to be Friday, November 17th. If we don't figure it out, there will be other stuff in the next couple of days, but they did say they passed it through the House, and now the debt ceiling, the continuation is going to the Senate. So if we get that out of the way before you know it, it's going to be smooth sailing until the next data set. But now this CPI, and if tomorrow does good, it will definitely buy us time. And unless Powell has something to say about it, then the next time we hear from him, he comes out swinging it. But Chad, let us get into the plays. So right off the bat, I know I was going crazy. I was about to go too crazy. I got 3 different plays here. I'm going to start with the first one, and we kind of already talked about it. There's big earnings already in this space, but that meeting with Xi Jinping and Biden, I'm thinking you're only going to get some good updates out of it because it's a pretty big deal, even though China took back the pandas. Again, search panda diplomacy if you're not familiar, but Alibaba has earnings on Thursday. I believe Baidu is next week. I thought they were going to be this week. It's JD tomorrow morning, but if you overlay SPY and the China stocks, you could see they've kind of moved in tandem for a while, but they got a really big divergence, and if the market is going to do good and things are going to get better, I don't think this delay on China stocks is going to hold up much longer unless it gets really materially worse. But the thing is, China's kind of already bad, so that's why I decided to make my average down. I had shares at like 130-ish or a little bit higher there. I made a couple double dips. We flipped it a couple times this year, but now average with another 100 shares, holding 200 shares at a total of 127 average. So I'm still down. I am considering buying more, but I said, hey, I'll ride out through some of the earnings this week and see, and if I do have more runway for the other earnings, I think that could be good. But that is play number 1. Watch out for them. Then play number 2, and if you haven't noticed, I'm bringing up those China names. Those are a name that's lagging. If the market's going crazy, people are getting excited. A lot of people asked today, what are the laggers? If you were there in the morning, you saw it, and it only lasted for a little bit. Some of those laggers ended up running after we even called it out, but Eli Lilly, this was one, and just watch out for the names that have already ran big. Watch out for the names that have already done good leading into this, because you'll notice big market move today, but if you already had a run up while the market was kind of dumping, you didn't really get as much of this. So they are already near the highs, and I would watch out for these names because they're either going to move opposite to the market or in tandem if we do experience another broader rally. So keep your eyes out for them. And then finally, Disney. I've not made a play post earnings. I'm surprised they're still holding up. Again, some of the last earnings there, usually by now, they could kind of sell it off if they really wanted to. So the fact they're holding up, $93 is a very key breakout level. I am going to be watching that. I think that's where they topped out last time, but even if you go back throughout the year, around $93-ish, you can see this was one of their bottoms. They break above like 94, 95. They still got a pretty big gap to fill out there. So gonna watch maybe for the end of the year, but like I said, I haven't made a play coming towards the end of the week. I don't know if I'll do one tomorrow, but either tomorrow, Thursday, Friday. Do want to see how Disney plays, but it has been weird considering everything it's gone through, and it still doesn't have, you know, a lot of people are defining Disney as still wait and see, but I do want to see how it holds up with this recent momentum that we have been getting. But those are the main plays. As far as everything else, I sold out of those ELF shares. I took like $100 profit, or maybe a little bit more. Then I got the Baidu shares. I flipped a couple of MESs and ESs, had a great day on that. Another bond play I was holding the other day, decided to hold through it on the data, and that played out, so I'm still in 1ZB that's up, and that was pretty much it. But I think I'm going to ride those for a little bit and then go here until maybe by Thanksgiving. Maybe we'll start to wrap it up, or we go like middle of December and see where we are by the end of the year. But I've said it all day, Chad. You are running out of time. Only 30 days left, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember the importance of peace and quiet, and understand the lack of drama. Even though you're in the market and there's drama left and right, don't underestimate how much drama you can make or avoid in your life, and how no drama, peaceful, simple is good. Is good, Habibi. Yeah. Oh, yeah. Oh, man, I didn't even give you a feel there. We got a lot to talk about. But, Chad, drink that water. Stay hydrated. Stay healthy. I'll see you in the morning. I love you. God bless you. And peace out. Hearn.